Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends, and most importantly, your queries during the course of the show. So please keep commenting on our live feed. We'll have your questions addressed by a technical expert on the show before bringing him on board. But I want you to know what the global handover looks like. European markets closed the month higher on Friday as investors digested corporate earnings and key economic data in the Eurozone. Stock 600 climbed 1.3% as almost all sectors finished in the positive territory. The pan-European benchmark has risen 6.3% in July, logging its best month since November 2020. Meanwhile, economic growth in the Eurozone accelerated in the second quarter despite the escalating gas crisis and record high inflation. Stateside, stocks climbed for a third consecutive session as investors digested strong tech earnings and looked past concerns about high inflation and a recessionary environment. Major averages rose to a winning week and their best month of 2022. Dow gained nearly 1%. S&P 500 jumped 1.4% and Nasdaq surged about 1.9%. Stocks in Asia trade mixed. Shanghai slips after China's July manufacturing PMI comes in at 49 versus the estimate of 50.3. For our own markets, SGX Nifty signals a muted but positive start. As we kickstart the month, we put the spotlight on auto sector. Will last week's underperformance continue? And how will sales numbers pan out this time around? In terms of individual stocks, we discuss the technicals of Yes Bank, DLF, Cipla and Shilpa Medicare. Okay, let's get going and talk technicals with Raja Venkatraman of NeoTrader. Good morning and welcome on board. First, I want you to talk about the trade setup. Strong handover coming in from key global markets. SGX Nifty pretty much in the positive territory. But yeah, it is looking muted as of now, but firmly above that 17,200 level. Should we expect some pullback coming by after last week's exuberance, or do you think the momentum is intact and we could very well continue the upward trajectory?
Yeah. Good morning, Karunya. First of all, the entire market, like you have been saying, is focused on how the entire revival has taken place. And yes, the revival has been surprising and well, it's also heartwarming because people were definitely expecting some case of bullishness to step in, and that's what has happened. And what really has happened is that there was some bearishness built into the option setup, which got released after some Tuesday. And with the constant gap up that we are seeing right now, is a symbolism of that pent-up bearishness which is getting released. And what you could see is that the swift movement which we are seeing to the upside should expect to continue because the overall momentum is seeing a steady opportunity to the upside. Now, what happened is because of the pent-up bearishness, some smart set of people have taken a good opportunity of that scenario. And the constant pressure being built up on the short covering has resulted in this kind of gap up movement. And when you take a look at the chart setup too, the gap up movement that you are witnessing could expect us to take us to much higher levels. So now what we are looking at is the constant increase in the PCR levels, suggests that there is some constant put writing happening at lower levels. And when you take a look at the kind of options positions being built in, there is a constant move in the OI buildup, and now you can see that the maximum pain point, which is where the concentration of the OI is at 17,100. So when you're taking a look at 17,100 to 70,000, so that could be an important zone to watch out for as we are heading into the day. And on the upside, what I see on the chart setup, which I have been forecasting in my other shows as well, is that somewhere in the region of 17,300 to 400 is where I could expect some profit booking. So where everyone is getting excited on the way up, that's where you will expect to see a reversal. That's what I believe in. So the price setup and the pattern setup are indicating that 17,300 to 400 could be a zone where you could expect some profit booking. So we need to be on our guards at the moment. And yes, the market is definitely a buy on pullback, and that will be closer towards the region of around 16,600 is where I would look to participate in, because the markets on the way down could be a more faster one. So I would be more watchful on the downside. Now, a caveat here is that I am expecting that the banks should participate, and yes, I am definitely looking at the banks to participate in this week. Of results which are coming out from the banks are mixed, and we are looking at SBI to come out with its results this week. So there are a lot of triggers which are expected this week. The first one would be the RBI policy, which is going to come in.
Yeah.
So the markets will wait and watch for that. Plus, there are 500 plus companies which are declaring results in this week. So there's going to be a lot of stock specific action. And there is also the auto number. So a lot of positive triggers which are expected in this week. So nothing to sully the positive bias, but then we need to ensure that we remain a buyer on dips rather than continuing to be only a breakout buying opportunity.
Okay. All right. You mentioned that banks will be in focus. Of course, it's an important week. Last week there was Fed meet, and now we have the RBI MPC to monitor. But let's talk about an individual name, Yes Bank. It's a trader's favorite as well. But this time around, we've got some news development as well happening there. Good 5% gain seen last week. What we are picking up, what my colleague Nisha had reported last week, is that they're going to sell stake to Carlyle and Advent, and that's something that is happening, it seems. 10% stake is what Yes Bank will be divesting to Carlyle as well as Advent for close to 8,900 crore rupees. It will be cumulatively issuing around 369 crore equity shares at a price point of 13.8 rupees per share to both of these investors, and they will also be issuing warrants at a price point of 14.8 per warrant. 256 crore warrants will be issued to, again, both of these investors. Let's talk about the stock move as well, Raja. Stock has seen a good 5% uptake last week, like I said, and it was triggered a fair bit because of this news development, this fundraise news that broke. Talk to us about the future prospects. Right now, it's perched at 15 rupees. Where do you think it's headed?
Yeah, so if you take a look at Yes Bank has been attracting attention not only from the big names, HNIs, also from the retail. So, but what is happening to the stock price is that it is making a base, and around it made a firm bottom around 11, and since then it is just undergoing a big consolidation at the moment. So what I would see is that unless some movement or some positive news flow takes it beyond 16, I don't envisage that there is a lot of expectation of the movement to the upside. Even the recent numbers were not very encouraging. So I don't expect that the kind of positive news flows is going to take it much higher. So yes, it needs to give a closing above 16 for us to see some further upside. So if I envisage that if it gets a move beyond 16, it could move all the way till around 19, because that is the kind of potential which I can see now. Because we are talking in small numbers, but then you'll have the base effect here, and that's what I see in Yes Bank right now. Yes, the setup is looking to encourage some positive sign. Now we need to await some moves beyond 16 for us to participate in. Till then, it's a wait and watch.
Okay. All right. In fact, lots of questions also coming on our live feed on different banks. I want to address Kura Shivakumar's question. He wants your view on Canara Bank. Good up move seen actually from 180 levels to now I think 222 is where it shut shop on Friday. So good momentum seen last 1 week, last 1 month. I'm sorry. So tell us, where do you think a Canara Bank could be headed?
Yeah, Canara Bank came out with good set of numbers, and that is what has helped the prices sustain the recent decline. Yes, it is recovering from lower levels, and the overall setup definitely looks promising. It could be a good pick amongst the PSU banks. Yes, the PSU banks are also performing well, right? So on the back of some good performance by the PSU banks, this looks to be a good bet. But between Canara Bank and if you're going to make a fresh investment between in the PSU banks, like leaving aside SBI, I would prefer Bank of Baroda rather than Canara Bank. So I'm just giving you Canara Bank versus BOB as a PSU bet. And now, if you're looking specifically at Canara Bank, then I would look for it to cross around 240 levels, because I feel that the prices would undergo consolidation until it crosses 240 levels. So I would be a wait and watch here, but it's definitely on the radar for a breakout buy rather than a dip buy. The dip has already occurred. It has come to a resistance zone, so wait for a move above 240.
Okay, all right. I hope they're taking note that BOB looks better on the technicals vis-a-vis a Canara Bank. You did briefly mention SBI, and that's something that I want you to elaborate on as well. Trilok has written to us, and he wants your view on SBI for the long and short term both. Yes, last 1 month the stock has done well. Good recovery seen from the recent close, about 13-14% upside. But if we look at the year-to-date performance, it has been completely flat. So tell us, what is your view on the technicals here, and is now a good time to enter?
Yeah, SBI, like we said, it's going to be on the radar this week, and the charts are definitely indicating that yes, it did spend a fair amount of time in consolidation. The period when the market was undergoing some correction, SBI was actually in a consolidation phase. So that's a healthy sign, which I would say. And now the setup is looking definitely promising on higher time frame as well. It's looking good for an intraday or a multi-day trade. So I would look to be a buyer at SBI at current levels. You could use declines towards 500 also as a good opportunity to initiate some buying opportunity, because I can see an upside towards around 700 within the next 6 months, because the setup is looking very, very encouraging, and the momentum could definitely take it higher, as the overall prospects could see a pent-up release in the momentum, and that could take the stock much higher.
Okay. Moving on to our next stock that we want to flag off on the show, which could be very well in focus today on back of its earnings, is DLF. Q1 profit has jumped 36%, coming in at almost 500 crores. Net sales bookings have risen more than 100%, coming in at 2,040 crores. Revenue stands at 1,516 crores. Again, a strong double-digit 22% YOY uptake seen on the top line as well. Talk to us about DLF. Here also, I mean, it has participated in the recovery rally of the last 3-4 weeks. Good gains coming in there as well, from 300 levels to now I think firmly above 380. 386 is in fact where it shut shop on Friday. So tell us, what are the technicals indicating?
Yeah. So the DLF saw. Of course, it has come out with some good numbers. Ahead of it, the decline which we saw earlier, it came into a nice value region, I would say, and around 360 levels, and that's where it found good support. And from there on, it has risen quite well, and I expect that this momentum could continue. And I would say that you should be looking to buy DLF at current levels and use dips towards around 370 to buy into, because amongst the real estate setup or amongst the real estate pack, DLF is a very good bet from a multi-day or a investment point of view. So I definitely look at DLF from a positive frame of mind, and one should look to participate in this counter at current levels for an upside towards 420 within the next 1 week.
Okay. Next stock on our radar on back of earnings is Cipla. There's been a marginal drop on a year-on-year basis for both bottom as well as top-line performance. A 4% drop thereabouts for the profit, and a revenue, a drop of 2.5%. EBITDA, meanwhile, has sunken 15% year-on-year. So it's not a very impressive set, I'd say. Though yes, largely the entire pharma pack has been witnessing a phase of weakness. Talk to us about how Cipla is positioned amid all of its peers, perhaps.
See, Cipla is a counter which is there in a sector which is inundated with a lot of US FDA norms. So that keeps on impacting the kind of setup. Despite its numbers, whether positive or negative, the stock is undergoing a major consolidation. It's made a base around 870 and is trying to recover. But I would definitely avoid Cipla either from a trading or a multi-day kind of view. So it's best to avoid this stock because this stock is not giving any kind of meaningful signal at the moment.
Okay. Talking about the farmer space, I want to flag off one more stock, Shilpa Medicare. The US FDA has cleared its advanced analytical characterization laboratory in Bengaluru, so some positive developments coming by. This particular inspection was conducted back in November, but finally they have got a nod from the US regulator. So talk to us about how Shilpa looks positioned right now. 413 is where it's perched at.
Yeah, so the news development may be positive, but it is yet to have an impact on the pricing at the moment. So around it has to survive around 400 levels, which it has been holding for the last 6 months. So I don't see any kind of reason to buy into Shilpa Medicare. Yes, there are some positive news flows. For those who are interested, could keep track of it. It needs to cross around 425 levels to have some kind of meaningful buying into this particular stock. Otherwise, I would preferably avoid this counter at the moment.
Okay. How do you looking at Dr. Reddys right now? Yeah, last week they also delivered the numbers, and Mallikarjun, one of our viewers, has also commented they want to know your view on DRL. If you could give us some idea of where it's headed.
Yeah, Dr. Reddy at the moment is headed to the way down, and the kind of setup which we are seeing right now is clearly underlying that there is a lot of inherent bearishness which is percolating at the moment. And if markets were to give up and we were to see a reversal in the market trends right now, so pharma space is on the brink of renewing that negative bias. And amongst them, Dr. Reddy would definitely attract some bearishness. So I would not be a buyer in Dr. Reddy. I would rather be a seller in Dr. Reddy. At the current levels or at rallies towards 4200, it is a very good sell opportunity. So, and more from a day trading perspective.
Okay. Let's shift gears and talk about what's happening in the auto space. Raju has written to us. He wants your view on Tata Motors. Again, good gains seen last couple of weeks, but overall net for year to date, it's still down 10%. Do you think there is some more legs to the rebound that we're seeing of late in the counter?
Yeah, I feel that Tata Motors have made an intermediate bottom for now at around 375 levels. There are news that they are going to have some better reporting from JLR as well. So that could be some positive triggers. And as far as the setup, chart setup triggers are there, that is also seeing an encouraging sign after, spending quite a while in trying to make a durable bottom. The prices have now come out of that scenario, and they are looking to stage some upward traction. So this could be a good time to consider Tata Motor at current levels, use, or if you are looking to buy somewhere on the decline. So I would suggest a region of around 420 to 430 zone to buy into. For the next few days, you can expect a target towards 470.
Okay. Raja, request you to stay on with us. I want to touch base with my colleague from MC Pro, Nitin Agrawal, who tracks the auto space closely. And Nitin, big day today, first of the month. The sales numbers will start trickling in. So ahead of that, want you to tell us how are the numbers likely to play out this time around? What are the big trends emerging?
The overall demand in two-wheel and passenger vehicle segment has been subdued due to significant price hikes taken by the companies to pass on their raw material prices. Secondly, the semiconductor chip shortage continues to play spoil sport in terms of production by the OEM. But what is encouraging is the demand for the commercial vehicle segment, which has been picking up post the opening up of the broader economy post the pandemic. And thirdly, the escorts or the tractor segment continues to do well, and in fact, it is expected to do well in this month as well because of the good monsoon that we have witnessed in this month.
Okay. What about commodity-linked cost pressures, supply-side constraints with respect to semiconductors? How's the situation now, and what are you picking up from a host of commentary that has been trickling in?
Well, talking about the commodity cost inflation, this continues to play a big role in the company's financial performance for the Q1 FY23. If we look at Maruti's, Tata Motors, and Bajaj Auto's numbers, all have posted a significant decline in EBITDA margin, primarily because of the material prices, especially metals. But what the management of these companies have indicated that the commodity prices are softening, and we can see a significant cool off in the second half of this fiscal. Secondly, moving on to the semiconductor chip shortage, though there continues to be a difficult situation in terms of sourcing the semiconductor chips for the automobile majors. However, the situation is easing now. The management of Bajaj Auto and TVS Motors have indicated that they found the new sources to source semiconductor chips, which is really helping in terms of production. What is encouraging from the commentary of these companies as the demand scenario continues to be very strong. For instance, Maruti has an order book of around 280,000 units. In fact, from JLR they have an order book of around 2 lakh. It is these production hiccups that are causing the problems to these companies.
Okay, and what are you making out of the numbers that have been reported so far? Some of them did actually disappoint despite a weak projection. So talk to us about the review so far and the expectations for the coming quarters.
Barring TVS, all Maruti, Tata Motors, and Bajaj Auto have posted a decline in their volume and a significant contraction in EBITDA margin. Decline in their volume was primarily because of the subdued demand and their inability to fulfill the demand which was there, primarily because of the shortage of semiconductor chips. Secondly, their EBITDA margin got impacted, as I mentioned earlier. It's primarily because of the commodity-linked cost pressure, especially the metals, steel, and in fact, the precious metal costs have spiked up quite significantly. But among all, the TVS has actually outperformed all of them, primarily because of their product line. They witnessed a 6% quarter-on-quarter growth in their volume, and in fact, they maintained their EBITDA margin primarily because of their cost reduction strategies that they've adopted. So overall, we believe that this quarter has been very subdued, but going forward, we believe the demand is expected to pick up primarily because of the good monsoon levels. And secondly, the easing of semiconductor chip shortage will lead to an increase in the production, which will help the fulfilling in the demand for the auto majors.
Okay. Lastly, so who do you think are the big winners from a long-term standpoint? Any favorites that MC Pro has in the auto space?
Well, yeah, we do have, we do like Bajaj Auto, Ashok Leyland, and Escorts from the space, primarily because they are trading at a reasonable valuation. Secondly, the growth prospects are very high for these companies. For Bajaj Auto, exports continue to play a very good, provide a good cushion to the company's financial performance, primarily because of the currency depreciation as well. Ashok Leyland is a big play, one of the leaders in the commercial vehicle segment, and Escorts continues to do well in terms of its volume numbers in the tractor segment. So within the auto pack, we believe these three can outperform the others.
Okay, so let's keep a close watch on all these three names then. I'm sure our viewers are taking note. Nitin, thank you so much for joining us and talking to us ahead of the numbers for the monthly sales and, of course, a roundup of the results that have been delivered so far. Okay, touch base once again with Raja, who's standing by. Raja, I want to straight dive into your top picks for the day. What are the stocks you're keeping on your watch list?
Yeah, I'll be suggesting two stock picks, the ones which we have already discussed. One is DLF. I would suggest a buy in DLF because the Friday's breakout was quite good. It was above a strong trendline resistance. So I would be a buyer at around 387, place a stop loss at 379 for a target of 397 to 410. So that would be my first recommendation. And my second recommendation would be on a long in Tata Motors at 453, placing a stop at 445 for a target of 463 and 467.
Okay, all right. With that, I'm going to wrap it up then. Thank you so much, Raja, for joining in and for helping our viewers out with their queries and chatting with us on markets at large. With that, it's a wrap. Thank you for tuning in to Morning Trade. Stay tuned. Santo and Markets with Santo and CJ comes up next.